Residual income. Yeah, residual income.
Residual income. Okay.
Residual income is what it's called. Yeah.
Talk to me about residual income.
Okay. So, yeah, residual income is what the VA looks at when they determine your eligibility for a home loan, right? It's a big factor in they what they're going to approve you for, right?
Okay.
So, on a normal conventional loan or FHA loan, debt to income ratio is the big thing. Debt
Yeah.
to income ratio is your debt and your income, right? And once you add up the minimum payments on your debt and your income, you divide that by each other basically, and that's how you get your percentage of your debt to income ratio, right? So VA is not too worried about that. I mean, they have a limit to what they'll do, but their big thing is residual income. Residual
Okay.
income is what you have left over after all your bills. So they
Okay.
also calculate. There's a certain amount they do per square footage of your home for electric bills. They try and estimate everything that you have, right, and then that you'll have monthly wise, and then they give you a certain amount that you have to have left over after you pay all your bills, right?
Okay.
So that's what residual income is. Okay. So it depends on your family size. It depends on your location, what that dollar amount is. Okay. So if your family size, let's just for an example, let's say you are in the South region. Okay. Well, we can tell me where you're going to buy. I'll tell you what region you're in. Okay. But
Right.
let's just say you're in the South, you're buying in the South, you have a family of three. That includes you, your wife, and a child, right? So your residual income is $772 a month that you have to have left over. If you're that or higher, you're typically going to get approved. So now, not every time, but it weighs heavy on your approval. Just because you
Okay.
meet the residual income requirement doesn't mean you're getting approved. I'm not saying that. What I'm saying is that that's what they lean heavy on when they do your approval. So,
Okay. That's
and
good.
it's all done through an automated underwriting system, right? So, though if we run you through the automated underwriting system for your loan, right? That's a VA automated system, and it approves you, right? Then we have to just verify that your residual income is accurate, that it's over that dollar amount, right? Well, let's say you have a complicated file and we have to manually underwrite you, right? Well, we have to make sure and calculate your residual income manually to make sure that you qualify that way. And they're going to have a little stricter guidelines on debt to income ratio on a manual underwrite. So that's a lot. That's kind of complicated. I know. I can explain it more to each individual person, right, for each scenario. But the big thing about residual income is it's great because it's really not that bad, like dollar amount wise for people to meet.
Right.
And it just gives you more. You find a house that's $50,000 over your budget on a conventional loan. Well, guess what? On a VA loan, you can afford it. Because they'll approve you, right? So, it they want to make sure you're comfortable after you pay your bills. You've got $772 left over to buy groceries and whatever. Now, how far that goes these days, but but you get into the home that you like. So yeah,
Well, that is so good. Thank you for that insight, Seth. And I'm looking forward to what the next videos have for
yeah,
us.
yeah. It'll be fun. I love talking VA loans. I'll do it anytime.
It's awesome. Thank you.
All right.